Okay, Chapter 4, Problem 7 asks us to take a statement of cash flows that is prepared under U.S. GAAP and convert it to IFRS. Well, U.S. GAAP is the one we know best, okay? And there's only a few differences between U.S. GAAP and IFRS. And they're found on there's a good chart on page 199 of the Spiceland Seppi Nelson text, okay? But I'll just review real quickly. Under U.S. GAAP, operating income includes dividends received, interest received, and interest paid. That's U.S. GAAP. Under financing, U.S. GAAP puts down dividends paid. Okay? Because they're going to our shareholders. Now, IAS number 7, that's IFRS, that's the IFRS requirement, the International Accounting Standard number 7, says that interest paid and dividends paid can be treated as either operating or financing. And in that case, financing is both preferred and more common. So I'll just highlight that for you. Furthermore, IAS 7 says that interest received and dividends received, they can be reported in either the operating or investing section. However, the IASC tells us that the investing is the more common or the more preferred. So, we have this cash flow statement. If we take a look at it, we're going to see that really most of it's going to be the same. And the thing that is absolutely positively not going to change is the bottom line. Because no matter how you count your money, you still end up with the same amount of money. So, let's take a look at this and begin. Well, cash collections from customers, that's not going to change. So, cash collected from customers, $388,000. And our purchase of inventory, okay, is $193,000. That's still the same. And our payment of operating expenses, see that down there, $66,000. That's not going to change. Okay. So our cash, net cash from operating activities under IASC 7 is $129,000. Now, here's where we get different. We're going to use investing activities, and we're going to use the more common of the two methods. When given an opportunity to pick one or the other, we're going to pick the more common, okay? So, interest on notes receivable, we're going to call that an investing activity for $4,700. Dividends received, so this is money we got from other companies, $31,000. We're going to bring that in. A collection on a note of $135,000. We're going to bring that in. Okay, and you see where we handled the note, so that's exactly the same. The difference is, the big difference we've hit so far is the dividend received and the interest. That's primarily the biggest differences we've come across so far, okay? And we purchased some equipment for $224. That doesn't change. So there's really more in common with GAAP and IFRS than there is different. The main difference is those four that I pointed out to you. I'm sorry. I'm trying to talk and write at the same time. Bad plan. So our cash inflows from operating activities, cash outflows from investing activities, and then we'll pick up our cash from financing activities. We'll finish this off. Cash from financing activities. So I'll just carry this over so we have the number handy. So we had some payments of a note payable. Remember, under GAAP, we took that payment of note payable. Okay, that interest payment, we took that as operating activities. Under IFRS, we'll call that a financing activity. Common stock is the same under both. And the dividends paid is the same if you choose the more common method, and we are going to do that, okay? So our net cash from financing activities is $214,300. So our net increase in cash, if you add together 81.2, 214.3, and 129, that's the operating. So that's operating. That's investing. And this is financing. If you add those together, our net increase in cash is $262,100. Our beginning cash and cash equivalents was $28,900, and our ending cash and cash equivalents $291,000, which is exactly where we ended up. So the major differences between IFRS and GAAP are just those couple that are listed there, and it's not a whole lot. You might just want to commit those to memory. And like I said, there's that chart on page 199 that you can use too.